Hey, what's good, everybody? Happy Monday already. Just getting the week started. The market's shooting off to all new high, or not to all new highs, but to highs here for the week. Obviously, just getting started. The Dow was higher by 336 points. The S&P was higher by 29, and the Nasdaq was higher by 72. Tech, financials, utilities actually leading the way. Every single sector in the market was higher on the day, meaning everybody's moving together. Even utilities, even real estate investment trusts, which is sort of odd, but hey, everybody's bullish on this day today, so we're going to go over that here with you. Little housekeeping to get started here. Podcast. We're going to try to do it live tonight. I can't make any promises. We got a lot of cool things to cover. We're actually going to call it the Dough Show from now on. So just kind of a fun way to talk about your finances with my brother. We're going to also be talking about investing, all kinds of different things there. So be sure to tune into that. I'm going to try to do it live. I can't promise anything, but if not, you can check out our podcast. We'll put the link in the description. What else? I'm going to be doing a video on Fidelity. Some horrible news coming out today about how much risk they're actually taking in your funds that you have, or your target date funds, the different freedom mutual funds that you may have. Unbelievably ridiculous. I can't believe that didn't make a more headline type news, but I'm going to do a video on that. It's a mess over there. So come to find out, people like Wells Fargo and Fidelity, if you are using them for your retirement accounts, they are taking an unbelievable amount of risk, which you may not notice too much. You might have noticed when the markets fell there the other day, but boy, that's intense. So we're going to do a video on that. Stay tuned. If you are clients of Jazz Wealth, I think we're all caught up. We got everybody to get their beneficiaries set up. Everything should be good there. I sent out an email today on the new tax calculator with the IRS. So if you want to calculate your W-4 withholdings, just remember, you do not want a refund. Okay? Nobody wants a tax refund. You want to either invest that money or put it in your pocket and use it for whatever you think is best. There is no reason these days why technology can't tell you the withholding that you should have on your paycheck and get you really, really close to being at break even, where you don't have a refund, but you also don't pay taxes. So if you didn't get that email, let me know. I'll send it out to you, or just send me an email. But I did get that out to everybody today. First thing this morning, I was up and ready to go, man. I got up early, I was all fired up and ready to get to work. So that should be in your email. Let's get started here with the markets. Last week, the sort of the panic or the sort of stress on the market was the tariffs. Is there going to be, or are they going to put these tariffs in there? President Trump said yes, he was going to do it. We talked about it. We said, is this a reason that you should panic? Should you change your long-term investment strategy because of that news? The markets were selling off quite a bit, but it wasn't a reason to change. We said that last week in our daily update video. Not a reason to change your long-term retirement view. This weekend, it seems everybody had a chance to think about it. And the stock market's up today, recovering almost half of last week's losses. So this just goes to show that this is why we don't actively trade. Now, Fidelity, when you see that video, you're going to be shocked to find out how they're trading your accounts and trying to time the market. I have never heard of this before with a mutual fund company, but they're going to be in some big trouble if they keep that up, and it seems like they are. So this is why we don't time your investments. We'll keep an eye on the broad market and see, is there some reason we should scale back? Is there anything serious like that financial collapse back in 2008? Maybe a reason to kind of sit on the sidelines for a little bit. But this tariff thing, not a big deal. It's almost a joke that everybody's focusing on it. It just goes to show how slow of a news market there is. The financial channels have nothing else to focus on. Bloomberg was focused on Italy for half the day today, so they've got nothing to talk about, and that's a good thing, right? We want the markets to just calmly go higher. Well, today was a really, 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 really good start. As always, in order for the markets to go higher, you need the banking stocks and you need the semiconductor stocks. Today we had both. Let's go over, we'll just use any ETF. Here's the financial sector today with a great day, 1.5%. So we're like, all right, check. We got the financials on track. They're playing along with us. And if we go over to just even the Nasdaq to show tech, the semiconductors, we could even drill down further actually. Is this ETF still around? Yeah. So here's your semiconductor stocks for the day, up almost 1.2%. You need those two to get the S&P to show any sort of support at all. And today was the day for that. They all kind of went in there and played along. Ironically enough, that was not your leading sector, utilities. The utility stocks were the leading sector, which sort of tend to not do that. They don't always roll right with the markets. But everything today, whether it was real estate investment trusts, that even had a great day today. Any interest rate sensitive products were all bullish today. So take it while you can get it. If you're invested in those sort of interest rate sensitive things, that's pretty sweet. Micron Technology, that was your leader. This is a semiconductor stock, probably one of the more popular ones. Broke out some new highs today. If you're a technical trader, you love that. That looks great to you. You're excited to be investing in that in the short term. That helped the semiconductors, of course, any tech-related holdings that you have. If you have tech ETFs, those did well as well today. Here's our tech ETF sort of sample that we're showing here, almost back to all-time highs. So really, I could ramble on and on about how good things were, but you get the point. Semiconductors and tech, along with everything else today, was just a pure bonus and got things sort of cranking off there. Let's talk about oil. Great recovery day for oil. If you're following along in oil, last week was a little bit weak. Anything that you held that was energy related, commodity related, we do have some of those investments, took a little hit. And here's the kind of screenshot of it. You can see everything's looking strong, but just last week there, just a little bit of a hit, maybe a sharper than normal pullback. So far this week, we've recovered over half of it, and the week is only getting started. It's Monday, right? So off to a good start. Reasoning behind that, last week the oil prices were lower because of supply concerns. Hey, there's maybe a little bit more out there than there should be. And then this week, so far, the news was there's more demand. So they're trying to fight that last week's news story saying there was more demand. But this time they threw in the kicker that OPEC would not be able to keep up with the demand, which might mean the U.S. could step in and grab a little bit more market share with our fracking and shale production. So we'll see how that goes. So far, so good. So anything energy related did very well today. If you've seen any sort of products that you've been invested in, whether it's oil directly, energy sector, oil service companies, or if we go all the way into commodities, we would include gold there as well. Gold was flat today, not really anything good or bad, one way or the other, just kind of a blah sort of a day. So not a big deal there. Let's see. What else? In the news, Amazon. Now, I want to kind of mention this for a minute because this is tech related. This is going to help support Nasdaq and any tech stocks or tech exposure that you have. This is a cool one. Amazon is going to start offering checking accounts, but read deeper into the news. They're going to offer the checking accounts with JP Morgan, right? And probably a couple other banks, but those guys won't get any of the business. They'll do that just to keep the regulators happy. JP Morgan and Amazon teaming up to offer checking accounts. Do you really think Amazon wants to be in the checking account business? What do you think? I don't think so. So to me, this is the first part of a brilliant move these guys are going to make into healthcare. So they're putting the little pieces together in the background. Amazon's got their pharmaceutical license. They actually already started offering generic over-the-counter drugs, ibuprofen, Rogaine, things like that, flu, cold and flu stuff. So you can already buy that with an Amazon brand on it. Now they're trying to have a checking account. This, I'm telling you, mark this down in your books. This is one of the steps towards the healthcare push. They want to control the money. So they partnered up with JP Morgan and Berkshire Hathaway. They're going to essentially disrupt the healthcare business. I really feel strongly about that. And the first step is sort of centralizing the money. So JP Morgan likely worked with them. They've already had meetings about this. They worked with them and probably said, here's what we're going to do. We're going to have checking accounts. Amazon, we're going to work with you. You can label your accounts yours. We'll label ours ours. And we're going to start offering this healthcare. I'm telling you, the big story today that everybody missed out on was not the fact that they're going to offer checking accounts. It was why. So keep that in mind. That's a big one there. Let's check in on Disney. I saw that in the news. Disney was only up 0.5% today. Their Black Panther movie. I don't really watch movies. Let me see. Yeah, Black Panther's the name of the movie. Another record day in the box office for them. Over 500 million in box office sales. I don't know if that's a good thing or not. I'm assuming it's a good thing. I don't really watch movies, so I'm man enough to admit when I don't have the best advice, and I don't have the best advice. So that's about it for that. Last week, we got retail earnings out of the way. Dollar Tree, I think, was left over. Dollar Tree was down a little today. They've got earnings coming up here, I believe, tomorrow. Nope, it's going to be on Wednesday. That's kind of the last sort of one that I like to follow, Dollar Tree. you kind of like to see that they, in my opinion, you kind of like to see that people are avoiding Dollar Tree, right? If the economy is a little bit weak, then we want to see Dollar Tree do well. If the economy is strong, we want to see Dollar Tree sort of report, you know, not so good earnings. Well, we want them to do well, of course, but we want to see smaller than average earnings. So that's my opinion. That's what I would like to see. Last week we had that TJ Maxx. Well, TJX is the brand. They came out and said everything was good. I didn't really like that. I like to see that the consumer is out spending money at the higher end stores, you know, spending more money on products. Discount, I don't know, bugs me. Let me know what you think in the comments there. Does that bug you at all? So we'll see about Dollar Tree. I think that's about all I have. Yeah. I think that's all I'm going to have for you today. Volatility down about 4%. That's going to be a little bit fun. That was one of the symbols that moved forward in my brother's Stock Madness we're doing in our podcast, so be sure to check that out. That's off to a bad start for him. No problem. Anyways, let me wrap it up here. Are there questions? Dustin at Jazz Wealth. Dustin at jazzwealth.com is my email. This is cool. This reminds me of the webinar days where I know there's a delay on this, but at least I can see. Yeah, pull up your account if you like, so you can see sort of the tech and the commodities, things I'm talking about. I'm not so interested in sort of motivating you to do something day by day in your account. It's more just an update, you know. I know some of you have the real estate investment trust as sort of a balancer in our portfolio, commodities, tech, things like that. It's really just to kind of stay up to date with it. Twitter. Do we still think Twitter has room for growth? Would you call it growth, right? I mean, they're just starting to turn the corner there, so I don't know that I would say growth. You can't really say recovery. What would be the right word for that? Just the fact that they're monetizing, you know, what they're doing and they're getting better at that. I like the fact that they're competing better. I should say it that way. I like the fact that they're doing better at competing on their ads, getting a little bit more money. I'm worried that Snapchat may be figuring it out a little bit faster than Twitter. Twitter's been kind of I don't know, like a little behind, it feels like, when you see how fast these other companies are moving to generate revenue. But so far, so good. I mean, it seems like people are optimistic about the future. I'll leave it at that. Keep it going. Keep it going. I love it. Well, that's all I have actually for you today. I'm going to get ready for our podcast, The Doe Show. I want to start doing more to motivate you guys not to invest, right? If you're with me, if you're investing, I'm so thankful. We're going to keep you going. But now I want to motivate you to do other things with your money. Did a great video on Friday about the high interest savings accounts. So I want you to really focus on the rest of your dollars too. That will make the rest of this process really, really simple. So I've got a whole list sitting right in front of me of all sorts of other videos that we're doing that cover your money, savings, budgeting. I want to make it easy. I want to help you guys out. So I'm going to wrap it up here. Is it better to have one stock in several companies or 10 stocks in one company? 10 stocks in one company. Not sure I understand that one. I think what you're asking is it better to just sort of invest in Twitter, Amazon, anything like that? Or is it better to invest in 10? I'm going to suggest it's better to invest in 100 by buying one. Looking at ETFs. There's a lot of great ETFs these days. You don't have to pick through each individual stock. What I do with this here, when I go through individual stock names, it's because they're represented inside of the ETFs that we have. And so I do want to know what's sort of outperforming and underperforming, but I'm not interested in investing in one particular stock like that. So what I would say is the answer is sort of skewed because I'm going to say buy an ETF or a group of ETFs, but inside of that, you could have thousands of different symbols you're invested in. So I would look at it that way, especially if you're new or don't quite understand, you know, how to invest in individual stocks. So I hope that's helpful to you guys. Thanks so much for watching. We're going to keep growing this. We're going to keep doing this every single day. Have a great Monday. We'll talk to you later.